full crew today. We have Micah out in Seattle and Tony. Tony's over in Washington, and Randy over in Atlanta. Myself here in Fort Worth, and Keith. Where are you nowadays?
This week I'm in Maryland.
Maryland, okay. Never know where he is. He travels a lot, goes on a lot of vacations. But welcome to our podcast. We've got just some great results that these gentlemen are doing this week. You might want to go to our website. We have a new website. We still have our Compound Stock website. It'll still be up there for a couple of months. We have a new one called www.macromomenttrading.com, and it's got all the same info that was in the CSE one website as far as all our programs and everything. But we've added a bunch of new stuff about the macro moment, which none of that was in the old website. Also, you can sign up for our free cow report. It goes out every Friday. It's dated on a Saturday. It's got all the emails we receive, questions that everybody asks, the answers that our folks here give them. And that's always had a brilliant editorial by myself. And it's really, it's been around over 20 years, published for over 20 years. So check it out. It's free, absolutely free. You can get that at our website, www.macromomenttrading.com. And it's called the Cow Report. And then you can read about all these different programs and what we do and such. We have this podcast every Thursday, 10 a.m. Central Time. And we're glad you're here. If you want to call in, you can call in. You can type in. It's on YouTube, and when you type a question in, it's going to pop up on the screen. Everybody that's attending this session will see it, and our gentleman here will answer it. We have a phone number 214-377-1108. 214-377-1108. Call in, and you won't be on the video, but everybody will be able to hear you, and we'll be able to talk to you. So let's see. Let's get started with Keith today. Keith, how you doing? How's it
doing fine, Joe.
So what's been going on this week with you in your?
I've been looking for the charts to reset to do a short-term CSM trade. The long-term, and it's a credit spread momentum trade, and the long-term ones that I tend to be in a day or two, just with the volatility in the market these days, it's unpredictable volatility. I'm just going to stay out. I don't really want to be in these overnight. So anyway, I'm looking to get in one of those. Looked like possibly this morning might be able to get into one. Then I had to be away from my desk for about 10 minutes and probably missed that early opportunity, but looking to get into that. I do the weekly credit spread service, and we have a webinar on Tuesdays from noon to 1:30 East Coast time, and go over all the charts, go over the rules for what we're trading on that, what I'm looking for, and to be able to answer questions. So time to be able to ask questions directly in real time there to get to answers on that. I did get into a short-term CSM one last week for a 7% gain, and just looking to build on that.
Okay, tell the difference between your technique, what you're doing, and what, let's say, Randy's doing. He's doing a traditional covered call, buying the stock and selling the call. What do you do?
So in this case, it actually started out back in the roundup that I would actually buy the long leg and sell the short leg. That is the one that's closest to the money for opening these trades. And once the tick turned around and started going in the money, which is bad for credit spreads, but if you close that short leg, then you can take advantage of that momentum gain as it goes further in the money. So that's what I originally started doing. Then I realized, well, why pay commissions on two legs of that? Just open the long leg when the tick turns around. So that's what I'm looking to do. Unlike the micro moment trades, though, I'm looking to be in the short-term one anywhere from probably about 5 minutes to an hour. So it's not super fast for doing that. On the long-term CSM, I may be in for an hour to 2 or 3 days typically. Mm-hmm. And again, just with the volatility, I just don't want to be in that long overnight right now. But we'll take a look at that. And I use the CSM charts, which were specifically designed for being able to look for momentum techniques on this, as well as the ICE charts and the advanced charts for determining when it's good to get in and when to get out of these trades. So, and those are all CSC product that you get in the toolbox for doing that trading.
Okay. Let me say this for the folks that don't know Keith. When he came, how many years ago, Keith?
I think it's been about 9 years ago now, surprisingly. Yeah.
When somebody comes new, we have a seminar, we call it a roundup, and hundreds of people come to that seminar, and we have a big cocktail party on a Friday night. We pay for it, and we have a big dinner Saturday night, and the roundups on usually Saturday and Sunday, and feature a few people that are brand new. Well, before the roundup, Keith was trying to have actual brokerage statements and show them where he'd have 1,000% return in what, 12-month period?
12-month period, yeah.
And he got right down a few weeks before the date came for the roundup, and something happened, and he didn't make quite 1,000. He made 950 or something like that.
Yeah, it was about 950, 960.
Now, incredible. Now think about that. This is. He had the actual brokerage statement, and it was posted right there. In fact, we still got it posted somewhere, And 900. Who in the world would have ever made that much money? I mean, incredible, absolutely incredible.
Yeah.
Of course, Randy probably makes that a week, but
No.
So
well, Tony and Mike have been doing that pretty consistently on the micro moment trades on that. Yeah. So that's really uber on that for doing that trading, and. But anyway, it's just been good.
Yeah, it's just absolutely just insane what your return. That's why people really should use your service because, I mean, who can make that kind of return?
Yeah.
Anyway. Okay, Randy. Now, what's the difference between your trading and Keith's?
Well, the trading that I do doesn't last only like 5 minutes to 15 minutes. It goes a little bit longer than that. But as you mentioned, Joe, a covered call is buying a stock, being long, and then selling a short call against it in the near term. So you can either do that for weekly income with the weekly options or monthly income with monthly options. But they are not speculative trades. We're entering them on the beginning of the rising cycle and deep in the money entry. So the stock can actually go down and still get called out for a profit with all your capital return. That's different than how the market typically uses a call. They use it kind of as a defensive. Well, I'm not making any money anywhere else, so I'm going to sell an out of the money call, hoping that it doesn't get there, type of a thing. And that's not what we do. We are actually using it to generate income, not for speculation, not for capital appreciation, but to generate weekly income so that you can take that cash that's in your account and you can either reinvest it or spend it to live on.
Yeah.
So,
go ahead.
Like Keith teaches his techniques in a webinar every week that's recorded and archived so that you can watch it at a later time as well. But it's actually live in the market. I do that as well with cover calls on Wednesday morning. And we go through the techniques that you teach in the 2-day seminar on the weekends, and the coaching that's done during the Platinum webinar supports those techniques. And so people can ask questions, and as they learn and get better understanding of how to do the process. In addition, I teach even a higher returning Platinum technique that instead of buying the stock, I actually buy an option that gives me the long position, and it's as well deep in the money, and then sell a deep in the money call against it for the near week. And that's the Platinum or synthetic covered call is what it would be called in the market, a synthetic stock position. And we actually go through positions. We put them in our own account. I'm searching every day for new positions that meet the requirements of the compound stock earnings techniques with the charts and rising cycles and when I find a position I'm actually going to place in my own account, I send out an email that says, here's what I'm planning on doing, so people can follow along and see exactly live in the market how the process is working. And once the position is filled and I actually know the exact numbers, then I send out another email that says, here's exactly what happened in my account. And the purpose of the training is that they don't even have to have any money. They can just open a virtual trading account and trade right along and learn the process, learn the techniques without risking any money. And then when they kind of perfect their understanding and get the experience, then they can go on and do their own trading. So I've been, of course, I started back in 2006, Joe, with the first seminar that I attended, and been around doing it since then. Last week, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I sent out 10 positions that I entered either Monday or Tuesday, and they were closed out on Friday, all for a profit, ranging from 4.4% return up to the highest one on the QQQ was 11% return, and that's just for the 1 week.
I think what's important here for everybody to realize, when you say you send out a position, you don't just send out a position and say, hey, buy this stock, this is going to happen. You prep it, you say, I'm going to do this. And then when you do it, you let them know that you did it and what the numbers look like. And then when you get out, they get to notice that. So they get, before you do it, every time you make a move, they get it about the same time you do it. And that's huge. Also in the covered call business, it's only one, well, I don't know how much Keith's technique does this, but as far as management goes, we don't care when you're doing covered calls about the stock going anywhere. We want to stay in business. We're going to generate that cash. We're going to compound that cash by selling those covered calls. So that tool, that call is a tool to generate cash with a traditional, if you own the stock or if you're doing the highly leveraged, but not to use the borrowed money, leap, where you get almost 100% leverage, 98% leverage, 95% leverage without the risk that you have by borrowing on margin from your broker. It's an incredible way. But it doesn't make any difference which way the stock goes. If you buy it and it goes down continuously every day for 2 years, in 2 years, you're going to be out of it. You're going to have all your money back. You're going to sell on the stock, and you're going to compound that money. You're going to keep generating money. And it's just a fantastic technique because you can get in and out of a position, 2 or 3 times a day sometimes. And the SEC and the option guys up in Chicago have now made the technique so much more viable because we now have, when Randy first started, we only had expirations the third Friday of each month. So you could literally go into a trade and cut off your computer for the entire month to the third Friday and cut it on and see if you were called out or not. In the meantime, you've made your cash. Now they have on many stocks, and they have almost every day new ones. These things expire every Friday, and a few of them even expire on Monday, Wednesday, and Friday. So this gives you the opportunity where we used to look for 3, 4, 5% a month back in the olden days. Now you can get that a week, and so you're getting 20, 30%, just the most conservative investing you could possibly do. It's a great technique if you own stocks, you don't want to sell them, and you want to, and they're dividend paying. You can. We have a technique absolutely fail proof, and to generate covered call income on your stock dividend paying stock without the risk of losing your stock. So, and Randy does all that stuff, and so it's really valuable.
Those are good points, Joe, because you talked about the management, but also that the stock can even go down, and we still get called out for a profit.
Yep.
3 of the 10 positions that I entered last week, all of which closed by Friday, all of which returned all the capital plus a return. 3 of them actually went down. And these aren't buying puts, thinking that they're going to go down. These are calls, covered calls that we're entering. But because we enter them deep in the money, it allows the process that the equity can even go down and we still get called out, get our capital back, and lock in a return.
What's amazing about it, let's say you own a stock, let's say you own Exxon, and you sell a call, and you want to be called out. You want to be called out, and somebody's going to pay you a profit. You're going to keep their money. You got their money immediately, and it's never going anywhere. It's your money. Just go spend whatever you want to do. And but you have to wait either to that weekly Friday or the third Friday, whichever one you're doing, to see if you're called out. If you're called out, you entered that deal to make money. If you're called out, you don't go in and do a dumb deal and say, well, I'm not going to get called out, so I'm going to get a higher premium and use a real low strike price. So I'm not going to get called out, so I'm not going to lose any money. You never do that. You know, the way that Randy teaches us stuff, you enter them right, you're never going to have a bad position. And if you're lucky and you have Exxon, you sell a call for $3, let's say, and the stock goes down that day, you can buy it back for $2.50. You know, you can do that, and now you're back in to do it again when it goes up. And sometimes, most I've done it in one day 3 times. Got into a stock, it went down, I bought the call back, it went back up, I sold it again, it went back down, I bought it back again. And at the end of the day, just make money right and left. It's not going up and down. I didn't care which way it went. It didn't make any difference because, you know, we have in our toolbox where you pick the stocks. It gives you the highest yielding stocks in a particular time period, and you just use those. And they all meet certain criteria, very basic criteria. We just don't want the company to go out of business. We don't care what the stock does. We just don't want the company to go out of business. So great technique. Been around forever. My dad was doing it. He's been dead 15, 20 years, and he was doing it 40 years before he died. So it's been around a long time. Okay, get down here to these high-flying guys for micro moment trading. They do the same thing Randy and Keith do. Their trades are very fast, and their session only lasts an hour every morning, Monday through Friday, and we call it session 1. The reason we call it session 1 is when they're finished after about an hour, then they leave. But the whole trading mechanism stays up on your screen, and if they come back, and they're going to come back if the market warrants it, otherwise they're not. But that things will stay up on the screen until 3 o'clock Central Time when the market closes. And you will get a notice on your cell phone. You'll get a text message that they're coming back. So you don't have to hang around in front of that computer. Some people do. They just stay there all day, but you don't need to. And you'll get a notice, but plenty of time to go back to your computer. They'll come back and they'll do a trade too. And they do excellent trades late in the afternoon. And Michael, was that 40% trade you did? Was that an afternoon trade or a couple of weeks ago?
I don't remember.
Yeah.
Was it late day?
Yeah, we all got back on during the some news about. I think it might have been the Fed.
Yeah.
Yeah, we've had a couple weeks ago. We had 2 days in a row where we got back on for an additional like 40 or 50%. 2 days in a row because there was that stuff about the Fed cuts and stuff. So yeah, we pulled multiple trades.
They just do 2 stocks. Micah does Apple and Tony is QQQ. And the reason you don't need any of the stock because you don't need diversification because we're never in anything more than a minute, let's say. And we're never in anything overnight, never in anything over the weekend. So you're not worried about diversification. What we want is something that goes up and down. And the QQ and the Apple have a lot of volume. Now, there are plenty of other good ones also. Those are just the particular ones that they use. And when they're doing their seminar, there's a screen there. It's our screen that you get with that service. It's also in our toolbox if you don't have that service, that same one that Keith and Randy use. But it tells these guys on these micro moment trading situations when to get in, when to get out. And you sit there and you watch that and you learn that. You don't have to subscribe to that service forever because you're going to get good enough, particularly if you're using, if you're just getting started and you're using virtual reality. Not virtual reality, what do they call it? Trading? Not virtual reality. What is it?
Virtual trading. Yeah.
Virtual trading. Yeah, okay, virtual trading. You can become an expert just by doing virtual trading because it's the exact same thing as the real trading. It's close to it, and you can just do incredible things. They're up for the last 15 weeks around 2,400%. This is almost the end of the 16th week, and we'll add to that. Today, I think something like 37, 38% return in about 11 or 12 trades. But they're fast. Sometimes they're talking over each other. But we try to, and they've gotten really good about being real specific, so you can tell them, you understand exactly what they're doing. So, do you have any questions there? Anybody have any questions yet coming through? No questions. That's unusual.
Yeah, no, we don't have any questions or comments yet. So
Okay. Might ask if anybody has a question or comment they want to ask. Go right ahead. It's unusual.
Yeah, we didn't as clearly tell everyone from the Micro Moment podcast. Usually we tell them to log on and how and where and why, and I think we kind of missed that today. So
Okay. Well, okay. Well, we'll just have a short session then. So, you guys have any comments?
The only thing I want to add is I hope someone on the micro moment trading course or training, whatever, was able to hop in on this trade that happened right when we got off this morning. It was 100% return. It went up a whole $1 on the option chain. So
Really?
yeah, huge move. So we did mention to pay attention to this put that was about to occur on right when we decided to hang up for the morning. So hopefully some of the listeners were able to get on that trade. It was a huge move.
yeah, same. The Apple went from about $1.17-ish to $2. So
Yeah. He was at 98 cents, went all the way down to, or I should say, went all the way up to $1.97.
Yeah.
So it was a really big push there.
Okay. Marcus, you don't have any questions there for release or anything?
Let's see. Wait, here we go. We've got one. It's not a question, but it is a thank you.
oh,
Thanks for all you do.
Okay.
well, hey, thanks,
Hey,
Pat.
Joe. Hey, Joe, did I hear rumor that maybe along the way there's going to be actually some micro moment seminar or something
Yes, there's
down the road?
Yes, there is, and we're just getting it put together. Yesterday we kind of talked about it on their morning session, and some people got so excited they started trying to sign up, calling Sue Ann, and she panicked because I hadn't told her really. But Dirk is looking for the place to have it, and these guys are going to be preparing their presentations, and we're just come up with a date here. Probably we'll have a date sometime. We will know the date sometime next week. We're not going to have a date for next week, but we'll know the date. It's going to be in the next few months, and it's going to be tremendous seminar. So, but yeah, we're putting it all together right now. It'll be here in Fort Worth, that's for sure. So.
Just want to mention we don't have any further information about this.
Yeah, we don't have any further information.
Yeah.
We know. Yeah, I got Dirk really mad at me yesterday. He said, I'm going to be in Puerto Rico. I'm not going to be attending this. I'm going to be in Puerto Rico on the 15th. I don't care where you are. I said, we don't have it on the 15th. So,
Yeah.
It's funny.
Yeah. So
It's coming, but we don't have any hard line dates yet.
he was getting emotional like Micah does. Yeah. Okay. There's one. Okay. Mary Ann.
Hey, Mary. Tony, do you use Active Trader tab on Thinkorswim? Thanks for the great education. First of all, you're welcome. Thanks for being on every morning. You often ask questions, so thanks so much for the feedback. I do not use Active Trader. It's just a personal preference. It does have some really good perks about the option chain on there, but I just pull up my whole option chain grid, I guess you could say, and I just kind of use that. But Active Trader works great for a lot of people, and just pretty much just a personal preference on what you like to look at, how you like to trade with it. So yeah, but certainly nothing bad about it, just personal preference.
Tony informed me yesterday that they are expecting a child in the next couple of months.
Yeah.
I've come up with two names. If it's a boy,
It is
Micro. Okay, you call it Micro. If it's a girl, you can call it Mini.
Yeah, there we go.
There's Frank. There you go, Frank. That's for Randy. You see it, Randy?
Yeah. How much of an account would one need to make 10 to 20,000 a month? Holy cow, that's a lot of money. Well, it's all based on percentages. So I don't trade every single dollar that I have into the positions. Usually, the account has only about 30% invested, and that's one of the plus benefits of the synthetic cover calls is less capital in the market. So you're risking less money out there in the market because, of course, any money that you put in the market has a risk to it, and so you can keep 70% or so of your cash just sitting on the sideline to reduce your overall risk. It's always nice just to have the cash sitting there. So you can just divide. If you want to earn $20,000 and you want to earn 5 or 6% a month, divide it out. You're probably going to be looking at $1 million out there trading. So
Yeah, I think the key there though is you make a lot more than 5% a month. You're making more closer to 5% a week.
yeah.
So figure 20%, and it's going to be a lot less money.
Yeah. So 20%, 20,000 divided by 20 is that'd be like $100,000 actually invested in the market every week. So.
And interesting. I have these examples in the calculator all the time of a retirement for a young guy just getting out of school. He can rake up $2,000, learn this technique, $2,000, put in the account, trading account one time, never put another penny in. And if you follow any of these guys and just pull out 6% or make 6% from the $2,000, the first month, 6% a week, which is easy, certainly with micro moment and with any of these guys' techniques, you're going to do that. In 12 months or 24 months, $2,000 start off with, never had put a penny in it. In 24 months, you're going to have a little over $800,000. Then you start taking 6%. In other words, you got 4 6%ers, right, during the course of the month. Take one, pull it out of cash, and that's $48,000. So you're going to make $48,000 a month, and you got lots of money in there. It's going to continue to compound, and in a few more years, you're going to have well over $1 million. It just gets bigger, and you're what you're pulling out in cash. You never put another penny in. So, okay, Eric.
One other comment though, Joe, is that the positions that I'm entering into, they don't require that $100,000. It's about $1,000 per position each week. So you can have a smaller accounts. It doesn't take $1 million accounts to trade with cover calls.
You're getting the leverage with the leaps, right?
Yes. Yep.
And the leaps just are in place of the stock. The leap is a fraction. Like you've got a stock that sells for $100, you're going to probably buy a leap for what, $2 or $3 or something like that.
Yes. Yep.
And it stands in place of the stock, so it doesn't increase leverage or anything. It doesn't increase risk or anything. It gives you almost infinite leverage, and you can really make lots of money using leaps. So.
Now there's another question there. Are there any preferred virtual trading platforms that anyone recommends? Says one of my brokers allows for single trade virtual trades in a demo mode, but they don't let you virtually fund that account. The E-Trade has a great virtual trading platform. I think does TradeStation have one as well? I don't use it, but I know E-Trade has a good virtual trading platform.
Yeah, and if you have an account, they just want you to put like $100 in there, and you're not going to use that money. But you've got to have some money in there. Then you can use their virtual account, which is real time, and so it's the closest thing you're going to have, to real time trading. And they give you about $80,000, $100,000, something like that.
Yeah, you can put I think you can actually add play money into that too. So, but you can trade it with $100,000.
It's a fantastically great way to learn the business without risking a penny of real money.
Yeah.
On E-Trade, they only have a virtual trading platform for Power E-Trade.
Okay, that's what I have, the Power E-Trade.
Oh, okay, yeah. If you want the E-Trade Pro, there's actually no way to paper trade E-Trade Pro. I would say the E-Trade Pro equivalent would be Tony's platform, Thinkorswim, and that they actually have. I believe it's just a tab account setting, right, Tony, that you can just click from your real to your virtual.
Yeah.
On the same platform.
Yeah, at your sign in, you just flip over the switch from
Yeah.
virtual to live. But I want to add something about the virtual trading that people need to be careful about, and that is when you get in on a trade, especially for micro moment people. When you get on a trade, those fills that occur on the virtual trading side aren't always very accurate at a good entry point. Because what I mean by that, you enter a trade at the bid and ask is 97 and 98 cents. They will sometimes fill you at 96, 95 cents. You're already in a +3, profit. And so just something to be wary of. Just right when you enter that trade, write down the ask price and then work from there. Because sometimes the fills are very inaccurate. And then once you transition over into live trading, it's a huge kick in the gut. So because you're used to getting these fantastic fills, and then you go to live trading and it you're 1 or 2 cents in a loss. So you gotta make it that spread. So just be wary of that. Pay attention to that. And just write down the ask price when you enter a trade, and then work from there.
And that's another point. I use Excel, and I'll record the bid and the ask prices on that, and can track those over time for modeling new kind of trades and doing other things for, in essence, virtual trading too.
And also, you can have accounts with no commissions. Merrill Lynch has a good one. I think you got to have $40,000 in the account, and you get a certain number on a daily basis, free trades, totally free. And as the account gets bigger, eventually you can do all trades you can possibly do, and there's no cost at all. So that's good. There's Mary Ann. I think Mary Ann's looking for Tony and Mike. You guys take that one.
Hey, real quick, I think.
Do you pick the option?
Randy and Keith, you guys said you had to leave around 10:30.
Yeah,
right?
yeah.
Okay. Well, who's going to answer Mary Ann?
Cool. Do you pick the option you trade based on the price, or do you also take into consideration the volume of the particular options? Yes, it's mainly based on price, Mary. It's not fixed because there's such a great change from Monday to Friday. On Monday, your one out of the money is going to be like a little over $2, and on Friday it could be around 50 cents. So it's a little different day to day, but mainly is the price, keeping it around $1. And then if there are two that are close, then I'll go for the one with the higher volume. But honestly, they all fluctuate, not the same, but I mean at the relative. It's all relative, The higher price ones are going to move some more cents, and the lower price ones aren't going to. But the percentage is fairly similar once you're in that super tight range of 1 or 2 strikes that you're looking at. So,
yeah, just usually, typically it's 2 or 3 out of the money. Fridays it varies because it's a lot of time decay on those options because it's at the end of the week. But typically it's 2 or 3 out of the money around $1 mark, like I said.
yeah.
Okay, you got any more questions there, Marcus?
No, so far that's the last one.
Okay. Okay, well, the two guys need to take off. I guess we can have a good time.
All right. Have a good week, everybody.
Talk to you next week.
Awesome.
See you later.
Thanks, guys.
Here we go. Okay.
All right.
Ribs. Okay, good deal.
Got
Okay,
some
well,
in here.
again, you can go to our website, micromomenttrading.com, www.micromomenttrading.com. Sign up for the free cow report. Start, dealing with these guys. Sign up for their service, and then they can money. We're averaging 150% a week. Over if you count the last 15 weeks, we haven't counted this week yet because it's the 16th week. But it's 156 or 157% a week, something like that on average. They very seldom ever have a loss. You see them do these trades using the same chart they're using, and they're telling you before they do it. They do what they call prep a trade. In other words, they say, we're looking at the QQQ 150 put or call, whatever, and And so that when he says he's getting ready to execute it, then that's the one you got it in your computer. And when he says, okay, I'm buying right now, you buy right there. When he says, I'm selling right now, you sell right there. And a lot of times people will stay in a little longer than he does, and they make a lot more money. But he's just trying to make 3, 4, 5%. And that's our game plan. We go in and out. That's what we call it micro moment trading. So, okay, guys, unless Marcus has some more, do you have any more messages, Marcus? Questions, comments?
No.
Okay, well, we'll call it a day. It's 36 minutes into the seminar. It's good. And Micah and Tony, thanks for being here. And we'll see y'all guys tomorrow, Friday.
Yeah.
Okay. See
Good
you.
morning, everyone.
Thank you, Marcus. Goodbye.
See y'all.
Awesome. Thanks, guys.